Good evening, everyone. Or perhaps, depending on where you are in the world, good morning. Because as the sun dips below the horizon here and rises over the bustling, vibrant financial centers of Asia, we could very well witness something profoundly significant tonight. I'm talking about a seismic shift, a moment that has the potential to redefine the very landscape of global finance, and more specifically, trigger a breakout in the precious assets I've been championing, advocating for, and investing in for decades. This isn't about a minor fluctuation, a blip on the radar, or even a modest correction that fades by lunchtime. No, I'm talking about the kind of move that marks a fundamental reevaluation of value, a forceful, undeniable correction to years, if not decades, of artificial suppression. And all of it, potentially, is set to be put into motion by the opening bells across Shanghai, Hong Kong, and Tokyo in the coming hours. If you're finding this analysis insightful so far, do me a favor and take a moment to hit that like button. It really helps us reach more people who need to hear this perspective. For months, and truthfully for far longer than that, we've observed a global market teetering on a precipice. Western economies, particularly the behemoths across the Atlantic, are burdened by an almost unimaginable amount of debt, suffocated by inflationary pressures that their central banks desperately try to rationalize as transitory, and have been masking underlying vulnerabilities with an endless barrage of quantitative easing, liquidity injections, and rhetorical gymnastics that would make a seasoned circus performer blush. It's a house of cards built on paper promises and an ever-expanding credit bubble. Meanwhile, while this spectacle has played out, the East has been quietly, methodically, and very strategically accumulating. They've been preparing, building a financial foundation that is deliberately separate from the fiat excesses and the speculative frenzy that often characterize Western markets. They're not playing the same game, and that's precisely why tonight's Asian Open holds such immense weight. The fundamental conflict, the core tension that has been building to this very moment, is between paper promises and tangible reality. It's the age-old struggle between speculative euphoria, often detached from any real-world scarcity, and prudent physical accumulation, driven by a deep historical understanding of what constitutes true wealth. For too long, the paper markets in the West, the derivatives, the futures contracts, the synthetic instruments, have largely dictated prices, particularly in commodities and precious metals. They've operated with a leverage so immense, it borders on the absurd, creating a pricing mechanism often profoundly disconnected from the true supply-demand dynamics of the physical asset itself. But what happens, I ask you, when that overwhelming, persistent physical demand, largely driven by the East, finally, irrevocably overwhelms the paper game? What happens when the emperors of the paper world are, at last, revealed to have no clothes? We've seen these cracks appear before, haven't we? Haven't the physical markets in Asia consistently demonstrated a premium over the COMEX for quite some time now? A premium that, by all rational measures, should have already forced a reevaluation in the West, yet has been largely ignored or explained away. Haven't we watched central banks across the East diversify their reserves at an accelerating pace, moving away from traditional fiat currencies and into physical gold, often in absolute secrecy? The question in my mind is no longer if this profound divergence between the paper and physical will lead to a breaking point, but when, and what form that breaking point will ultimately take. Tonight, ladies and gentlemen, might just be the night we get a very clear, very loud answer. And if you haven't already, please subscribe to the channel and turn on notifications so you don't miss part 2 of this critical discussion. Let's delve deeper into this dynamic, because understanding the underlying mechanics is crucial to appreciating the potential magnitude of what could unfold. The Western financial system, particularly regarding precious metals, operates with an almost unfathomable level of leverage. Take the COMEX, for example. For every single ounce of physical gold that is genuinely available for delivery, there are often hundreds, sometimes thousands of paper claims against it. These are futures contracts, options, ETFs, all essentially promises to deliver gold that, in all likelihood, simply isn't there in the physical vaults to meet simultaneous demand. This system thrives on the assumption that only a tiny fraction of contract holders will ever demand actual physical delivery. It's a fractional reserve banking model, but for commodities, And it allows powerful market participants, often large investment banks operating as bullion banks, to short the market with abandon, creating what are essentially naked shorts, selling something they don't physically possess, nor have any immediate means of acquiring, betting that the price will go down or that they can settle in cash. This paper suppression has been a powerful tool. It has kept the price of gold and silver artificially low, preventing them from acting as the true inflation barometers and safe havens they inherently are. This serves a strategic purpose for Western central banks and governments. A rapidly rising gold price is a flashing red light, a clear signal that fiat currencies are losing purchasing power, that inflation is rampant, and that confidence in the established financial order is eroding. By managing, or manipulating, as I would argue, the price of gold, they attempt to maintain an illusion of stability and control, perpetuating their narrative that their policies are sound, even as the monetary base expands exponentially and real assets become scarcer. Now, contrast this with the Eastern approach. In places like China and India, gold is not just an investment. It's deeply embedded in cultural tradition, a millennial understanding of wealth preservation. It's often the ultimate form of savings, passed down through generations. The Shanghai Gold Exchange, SGE, operates on a fundamentally different principle than the COMEX. While there are paper aspects, the SGE is predominantly a physical delivery exchange. When you buy gold on the SGE, you expect to get physical gold, not just a paper promise. This difference is absolutely critical. The demand in Asia isn't for paper profits. It's for tangible wealth, for physical security in an increasingly uncertain world. And this demand has been relentless, year after year, absorbing vast quantities of the world's newly mined gold and a significant portion of what gets recycled. What's more, the East has a clear strategic imperative. They are actively engaged in de-dollarization efforts, seeking to reduce their reliance on the US dollar as the world's reserve currency, a dollar whose power has been weaponized through sanctions and financial controls. Accumulating gold, and to a lesser extent silver, is a cornerstone of this long-term strategy. It diversifies their national reserves away from volatile fiat currencies, provides a universally recognized store of value, and enhances their economic sovereignty. They're not just buying, they're strategically repositioning for a multipolar financial world. I've watched this unfold for decades. My personal experience, my observations of market anomalies, the persistent premiums, the subtle shifts in global trade flows, it all points to an unsustainable divergence. We've seen historical parallels, of course. The London gold pool in the late 1960s, for instance, was a consortium of central banks attempting to suppress the price of gold. It ultimately collapsed under the weight of market forces, leading to gold's decoupling from the dollar and a dramatic price surge in the 1970s. We're in a similar, perhaps even more precarious situation today. So, as we edge closer to the moment, consider this. The financial world has often dismissed the East as a follower, a mere reactor to Western impulses and market movements. But I've watched for decades as a new power has been quietly forged, a power rooted in tangibles, in wealth that cannot be printed into oblivion, in a deep understanding of monetary history that seems to have been forgotten in many Western capitals. Tonight's Asian Open isn't just another trading session. It's a litmus test for the very architecture of global finance, a moment where true supply and demand might finally assert itself with unparalleled force. The revelation I'm hinting at, the core of my conviction for what could unfold tonight, is this. The artificial suppression of precious metals, so meticulously maintained through gargantuan paper derivatives markets and orchestrated narratives in the West, is reaching its absolute existential limit. The insatiable physical demand emanating from Asia, driven by that deep cultural understanding of wealth preservation and, crucially, a clear strategic geopolitical imperative, is now poised to simply overwhelm the paper shorts. We're looking at a scenario where the sheer volume of genuine buy orders, the insistence on physical delivery in markets that actually prioritize it, could ignite a short squeeze on an unprecedented scale. This is particularly true for gold and silver, which the Asian markets prize above all else. This isn't just about price discovery, it's about price rediscovery. a forceful, undeniable return to fundamental value, closing the vast, illegitimate chasm between true intrinsic worth and speculative manipulation. The Asian Open provides the perfect crucible for this to manifest, a crucial window where the physical market's true strength can assert itself before the usual Western interventions and circuit breakers can fully mobilize. The implications are staggering. We are not just talking about a price jump, a marginal increase. We are talking about a fundamental re-rating, a complete shift in perception and value that, once initiated, will reverberate through every single corner of the financial world. Prepare yourselves. This is just the beginning of understanding the true magnitude of what could unfold in the hours ahead. Make sure you're ready for the deeper dive into the specific consequences and how you can position yourself. To stay informed and be an active part of this crucial conversation, please do me a favor. Smash that like button right now. Share this video with anyone you believe needs to hear this urgent perspective, and most importantly, subscribe to the channel right away. We'll explore the direct implications, the historical precedents that reinforce this view, and what you can do next in the upcoming installment. Don't miss it. We've been talking about the accumulating pressure, haven't we? That coiled spring, ready to release. The kind of tension that builds not over days or weeks, but over years, even decades, of misguided policies and market distortions. We've discussed the signs, the whispers in the data, the seismic shifts beneath the surface of the placid narratives. But what if I told you that the fuse is shorter than most realize, and the igniter is about to strike in just a few hours? Remember our discussions on the unprecedented confluence of factors, the debasement of currencies, the unsustainable debt loads, the escalating geopolitical chessboard that makes every move precarious. For weeks now, I've watched, and you've watched, as the global financial system has teetered on the precipice of something truly significant. We've seen markets hold their breath, often defying gravity in ways that simply don't make fundamental sense. The volatility index at times felt artificially suppressed, like a lid clamped firmly on a boiling pot. And the pivotal moment, the trigger point I've consistently emphasized, is that early morning surge of activity, when the Asian markets awaken and begin to trade. Their actions, their liquidity, their immediate reaction to the overnight news cycle, have a profound and often underestimated impact on the sentiment that cascades westward through Europe and into North America. It's an early warning system, a harbinger of things to come, and tonight, I believe, it could be the catalyst for a breakout that shakes complacent investors awake. The official narratives continue to paint a picture of resilience, of contained inflation, of a soft landing, almost as if these pronouncements, repeated often enough, can magically alter economic reality. But those of us who look beyond the headlines, who understand the true flow of capital and the historical patterns of monetary collapse, know better. The conflict is stark. On one side, central banks and governments desperately trying to maintain an illusion of control, armed with an arsenal of tools that are increasingly proving ineffective. On the other, the relentless, unforgiving forces of supply and demand, of dwindling trust in fiat currencies, and of a world seeking tangible value. The tension isn't just growing, it's reached a critical mass. The problem is that the market, for all its supposed efficiency, is often backward-looking, reacting to events rather than anticipating them. But tonight, the Asian Open presents an opportunity for anticipation to become realization. The question isn't if it breaks, but what breaks, and how violently will it cascade across the global financial system. Will it be a sudden, dramatic spike in gold and silver, signaling a loss of confidence in the paper money system? Or will it be a broader repudiation of debt-laden assets, forcing a reevaluation of portfolios on a scale we haven't seen in generations? The market has been holding so many open loops, so many unresolved questions about the true state of inflation, about the solvency of various entities, about the sustainability of current interest rate policies. Tonight, some of those loops are going to snap shut, and the reverberations will be felt globally. Let's talk about where I believe this energy will first manifest. For me, it always comes back to the hard assets, the immutable stores of value that have stood the test of time through every conceivable financial crisis: gold and silver. We've witnessed an unprecedented accumulation by central banks globally, especially from nations looking to diversify away from the dollar. These aren't speculative hedge funds. These are sovereign entities making long-term strategic decisions. They're buying physical metal, often in large undisclosed quantities, because they understand the inherent fragility of the current system. And consider the supply side. We're seeing peak gold narratives emerge, with discoveries dwindling and costs of extraction rising. This fundamental imbalance, where demand is surging and supply is constrained, is a recipe for a price explosion. The paper markets, with their massive leverage and derivatives, have for too long dictated the perceived price of these metals, but the physical market, especially in Asia, operates on a different logic. It deals in tangible bars and coins, not promises of delivery. The role of Asian demand cannot be overstated here. In cultures spanning from India to China, gold is not just an investment. It's deeply embedded in social fabric, a symbol of wealth, security, and generational transfer. As economic prosperity grows in these regions, so does the demand for physical gold. Their populations are immense, their savings rates are high, and their historical distrust of pure fiat systems is well-founded. When these markets open tonight, with their vast pools of liquidity and their keen eye for value, any significant geopolitical news or any fresh crack in the Western financial facade could unleash a torrent of demand. They don't just trade, they accumulate. They don't just speculate, they store. This physical buying pressure, often ignored by Western analysts fixated on paper derivatives, is the real force that can break the dam. And what dam is that? It's the dam holding back the inevitable consequence of a fiat currency crisis that has been unfolding for decades. Quantitative easing was not a temporary measure, it was a systemic addiction. Fiscal deficits are not exceptions, they are the norm. We are witnessing a slow-motion race to the bottom among global currencies, each nation trying to devalue its way out of debt, eroding the purchasing power of its citizens in the process. When people lose faith in the paper, they turn to what is real. They turn to what cannot be printed into existence by decree. If you find this analysis compelling, if you believe that understanding these underlying forces is critical for your financial well-being, do me a favor, hit that like button and subscribe to the channel. We need to get this message out to as many people as possible because complacency in times like these is a luxury no one can afford. Furthermore, the geopolitical stressors are not just background noise, they are active accelerants. Sanctions, trade wars, the explicit efforts by several major nations to de-dollarize their reserves and trade settlements, these are not minor skirmishes. They are fundamental challenges to the existing world order, and they invariably drive a search for neutral, unconfiscatable reserve assets. Gold fits that bill perfectly. When trust in international institutions wanes, trust in the inherent value of gold ascends. The market has been underpricing these risks for too long, relying on historical paradigms that are rapidly becoming obsolete. So, as we edge closer to that critical moment, the Asian Open, I want you to remember that what happens then won't just be another trading day. It will be the culmination of these pressures, the first observable manifestation of a market finally repricing reality. We are about to witness the unveiling of an undeniable truth, a moment when the financial system corrects itself, not through orderly adjustments, but potentially through a violent, upward repricing of the very assets that central banks have worked so hard to suppress. Tonight, as those markets awaken, they will not merely be trading commodities. They will be affirming the true value of hard money against a system stretched to its breaking point. The breakout I speak of is a significant surge, primarily in precious metals, signaling a profound loss of confidence in fiat currencies and the institutions that govern them. This surge will be fueled by Asian demand, which, unlike Western paper markets, is largely focused on physical delivery. This initial wave of buying will then cascade, forcing Western paper markets to scramble, potentially triggering margin calls and short squeezes in gold and silver derivatives. The why is simple. It's the inevitable reckoning for decades of financial mismanagement, coupled with recent geopolitical catalysts that have accelerated the loss of faith in the existing monetary order. This will not be just a blip. It will be the first wave of a larger repricing of assets, exposing the inherent fragility of the current financial system. The Asian Open is the trigger because of its focus on physical markets and its early timing, setting the tone for the rest of the world. It is the moment when underlying value asserts itself over artificial valuation. This isn't a speculative gamble, it's a strategic imperative. The shift we're witnessing is not just about making a profit, it's about preserving the wealth you've painstakingly built in a world where the rules are rapidly changing. Prepare yourselves. Review your positions. Consider the implications of what I've shared tonight and over the past few weeks. Don't just watch this unfold, understand it. And if you're serious about navigating these turbulent waters, make sure you're subscribed to this channel for ongoing, critical insights. Share this video with anyone you believe needs to hear this message. The time for complacency is over, and the time for decisive action, for understanding the true nature of wealth, is now. Stay informed, stay vigilant, and remember, in times of unprecedented change, knowledge is your most valuable asset. Like this video, subscribe, and hit the notification bell so you don't miss our next crucial update as these events unfold.